You don't get paid for being early, you get paid for being right. That one sentence changed everything for me, because for years I was obsessed with catching the move first, catching tops and bottoms, predicting reversals before they happened, that sort of thing. But that just left a big hole in my account. And what I realized is that trading this way is just a glorified form of gambling. Trying to catch tops and bottoms or predicting the market will be your downfall. There's no way to get an edge out of this. Eventually, I realized the only serious way to profit consistently was to catch the meat of the move. That means I don't need to time every move perfectly, just get most of what's in the middle. I'd always wait for confirmation, always enter a little late and exit a little early. That shift from prediction to confirmation is what finally made me consistent profit. Trading is a whole lot simpler when you wait for the market to show its hand instead of guessing. So in this video, I'll show you exactly how to find that confirmation and wait for the perfect moment to enter and to exit, so that you can finally stack win after win and watch your account go parabolic. Let's talk about what really destroys your P&L. It's not your strategy and it's not even your risk management. A trader can survive and even be profitable with a mediocre strategy and half-decent risk management. But what they can't survive are ego trades. No matter how good you think you are, ego trades will ruin you. And those are trades where you try to predict the market instead of react to it. This wouldn't make much sense from an outside perspective. Imagine you were watching your friend trade, and they had a strategy. But they would keep taking trades outside of that strategy and kept blowing their accounts. You'd tell them to stop taking those trades and only focus on quality trades within their strategy. These are trades like trying to nail tops and bottoms or get a so-called perfect entry. It's impressive when it works, but most of the time it doesn't. That means it has a negative expectancy overall, and you should avoid it entirely. And another one which is sneakier is entering right before you get your confirmation signal because it's about to happen and you want to get a slightly better price. Well, most of the time you end up paying for that too. If your entry trigger is at the break of a high, let's say, and you decide to enter a little bit earlier to get a better price, you'll often be disappointed to find that running in front of your strategy doesn't pay that well. With these trades, you weren't following your plan and you weren't trading what was actually there. You just wanted to be right and forced something that wasn't ready yet. Now, there's an easy fix to this, which is always waiting for your confirmation signal, no matter what. If you set the ego aside, you'll notice that most of your P&L comes from capturing the middle of the move once you get confirmation that the move will happen. That's when you get a high probability that your trade will work, while also giving you a solid risk reward. This gives it a strong positive expectancy, which means this type of trade will produce a lot of profit for you over time. But, of course, waiting for confirmation only works if you know what confirmation actually looks like. So let me show you what that looks like on an actual chart. So this is a level-to-level chart. If you're new here, we mark out high-quality supply and demand levels, and then take trades from one level to the other. I'll link a video here where I go more in depth on that. Now, the purpose of this level-to-level chart is to map out where the price might go next. The market moves from one level to the other. So all we need to do here is figure out which level is more likely to hit first, and then trade in that direction. And the mistake that a lot of traders make is trying to pick a direction without any confirmation, and then getting chopped up or stuck in the wrong direction. So in this case, are we more likely to move to the supply level above or the demand level below? And more importantly, would you buy, sell, or sit it out? Well, we don't need to guess. You might have an opinion of where the price could go next, but it doesn't mean anything unless the chart actually confirms its direction. The correct answer here would be to sit it out, by the way. For one simple reason, which is that the price isn't at a supply and demand level yet. We need to be in a level to take a level-to-level trade, right? Anything in the white space is just gambling. So let's look at what's happening here. The price dropped from our supply level to our current level, and it did this pretty aggressively. And the cloud is firmly sloping down, which is telling us that the price is in a downtrend. In this case, our bias should be bearish. But look at this candle. We sharply bounced off the current level, and it looks like the price might reverse. So what do we do here? Do we follow the cloud and take a short, or do we bet on the reversal and take a long? This is precisely where confirmation comes in and prevents you from making the wrong decision. The cloud is bearish right now and price is in a downtrend, so our bias is naturally bearish. The burden of proof is on the bulls to prove that this reversal is serious. If not, we will continue trading with the trend and riding the price down. And now we can reduce it to really only two scenarios, both of which are very high probability. The first scenario is the bullish scenario. For a true reversal to occur, bulls will need to reverse this downtrend. That would mean that the price needs to break above the cloud into the next supply level, and the cloud itself needs to flip bullish. Once this happens, the trend will officially have reversed, and we can take a long to the next supply level. That would be the confirmation we need to go long. So, we wouldn't even consider a long until the price can break into the next supply and fit these conditions. Then we have our second scenario. In this case, the price fails to break above to the next supply and continues moving with the trend and breaks through our current level instead. This is currently the more likely path, as you're trading with the trend and not against it. Remember, the burden of proof here is on the bulls, so they'll need to give us a much stronger reason before we consider their position. But as long as that doesn't happen, the price will continue the downtrend and move to the next demand level. The exact confirmation point would be when we break back into the level and break under the low. That tells us that this attempted reversal failed and that this move was simply a lower high in a downtrend. So our two choices are either a break of the current level or a break of the supply level above. We wouldn't even consider this move here because there isn't any confirmation to either side. As long as the price stays in between these two levels, we don't know where the price will go next. It can just continue ranging here without a clear direction and chop you up. Only a breakout to either side would give us enough confirmation to take a trade in that direction. So that's the two high probability scenarios we have mapped out, and the only ones we should consider trading. Now let's see what happens. We failed to break above the cloud, then the price took out the low of that candle. That's our confirmation to enter short. Then we place our stop above the most recent swing high and target the next demand level. We know that the bears will stay in control now until we have enough buyers to step in and stop that momentum. But that kind of volume only exists at the next demand level. So bears essentially have free rein until we get to the next level, which is why we can target it so confidently. Of course, if we were taking a level-to-level trade when the price is at this bottom level, we would need to restart the process and map out our two scenarios. But we don't need to worry about that. For this current move, we know that we have enough confirmation to take this short. And that's how we get the perfect entry and exit system without entering too early or getting confused. Some traders might have looked at this move and decided that the market was overextended and they would have bought the dip. But that would have been a catastrophic mistake. If you're trying to catch a reversal, do it the right way and wait for the market to finally start tilting in your direction, because chances are you won't nail the exact top or bottom and you'll be stuck on the wrong side. That's the exact mistake I used to make. It's not about predicting which move is right or trying to time the market. It's about waiting for confirmation, then catching the meat of the move. And that's how you actually start stacking wins and don't get dragged down constantly by low-quality trades. So to recap, this is how you should approach every single trade. Number one, define a bias. And that means look at which direction the market is trending in, then map out two scenarios. One of these will be with trend and will be mainly what you're looking for, while the other one will be a reversal. These trades must be level to level. Don't take anything outside the system, then wait for confirmation. Make sure that the price actually does what you're waiting for and never enter too early. And finally, execute the trade and exit at the next level. That's how you catch the meat of the move every time and finally start bulking up your PNL. This is when you stop gambling and finally start trading. By the way, this is exactly what I teach traders in my mentorship. You'll work with me directly, and we'll build a custom plan around your trading. We'll have one-on-one calls where we break down your trades, your mistakes, and fix your edge, as well as a private chat to communicate with me. I'll also give you access to this exact level-to-level chart that you can use in real time. So if you're interested, click the link down below to apply. And if this video helped you, then be sure to drop a like and hit subscribe, because I drop videos exactly like this every week. I'll see you in the next one.